Hey there, Kenneth French of Vast Voice, telling business secrets to entrepreneurs. We're very, very happy you stopped by. Either you're going to watch this or listen to this because you want to take your business to the next level. You're probably an entrepreneur who's either just starting out or you've been around for quite a while and you want to take your business to the next level. You're probably a real estate investor, maybe even a real estate agent, maybe a professional or of some sort, professional advisor of some sort. And well, you are stopping by because you need some valuable advice from one of the top industry leaders there is. Anyway, thank you very much. Once again, Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Really glad you stopped by.
How would you feel about getting rid of all of your real estate holdings and going headlong 100% into crypto and becoming even richer? Well, that's exactly what Beau Turner did. Beau, what's up, buddy?
It's good to be here, Kenneth. Thanks for having me on.
Yeah, that's 100% accurate. You decided to get rid of all your real estate, which in itself was a pretty good portfolio, and dive into crypto mining, blockchain mining, et cetera, et cetera. We'll go over that. But man, that takes a gutsy guy. But it sounds like now it's all passive income, or I should say, recurring income, and you're very happy because you get to spend time with your family, playing soccer or whatever it is you do, and all while getting rich. Sound about right?
Going on long walks with the dog and enjoying nature.
Tell us a little bit about yourself and give us a little bit about crypto mining. Let's get into it.
Yeah, absolutely. Well, came up in Alabama, grew up there, started a real estate portfolio just freshly out of high school. My family had a little bit of a background in it. So that was the most natural place for me to start learning and developing and building wealth. I got an engineering degree out of SMU in Texas. And then after a few years of running my real estate company and building a portfolio, decided that it wasn't for me, that it was not igniting my passion. Great asset, great wealth building vehicle, but I wasn't going to have an edge long term over somebody who woke up every day and loved living and breathing real estate. And I found Bitcoin in 2015. Wished that I had gone all in at that point, but it took repeated exposure. And by about 2020, the right people were in my ear. Sailors started making the podcast scene and talking about Bitcoin. And something like this has a little bit more credibility when a billionaire is talking about it than when it's a cypherpunk. So I started to listen, and we talked a little bit offline about this, but I really saw it not just as this kind of digital commodity that people are so unsure of, but really as a form of property, an evolution of property. And my biggest barrier to just selling all my real estate and buying Bitcoin itself was losing out on cash flow and the tax advantages of owning real property. So mining was the most natural vehicle to find that cash flow vehicle and get the depreciation benefits of having physical equipment that you're operating, effectively starting a small business with all the favorable tax treatment the businesses get. And after a few very hard won lessons and bad experiences with partners, decided to build a company that offered co-location to other people and build the service that we wish we'd had when we got in.
Yeah. So you mentioned there's a lot of stuff to unpack there, but okay, here, okay. If I'm a real estate investor, a lot of our listeners and viewers are worth a pretty good amount. Let's just say I'm worth 10 million bucks. Why, in your opinion, Bo, should I even look at crypto or Bitcoin mining, et cetera?
Well, the one thing that I think is more important than any is where does the opportunity lie? And if you're familiar with the makeup of global assets in the world, real estate makes up about a third of the 900 trillion sea of assets. Real estate's about 300 trillion. If you think there's any merit to Bitcoin at all, it is still 2 trillion of assets. So 0.2% of global assets. And I'm of the opinion that it's on its way to be the global reserve asset. So just in terms of upside, I think you are foolish to have a 0% allocation. Even if it's sub 10, just having some amount of it is going to be more beneficial than not. And the kind of larger context that it sits in, at least with mining specifically, is it's at the intersection of a reinvention of the financial system, a reshaping of how we interact with energy, and a world that increasingly runs on computing for more and more of what we depend on day to day. So it's, in a way, playing on these mega trends that if you don't have anything to do with any of them, you're going to be lost in 10 years.
Yeah, you and I could talk all day. Oh my gosh, I don't even know where to start. I'm kind of blown away by. I'm so glad we're talking about this. You're an engineer. You've built a company to scale, so you know exactly what what you're talking about when we're talking about crypto mining, et cetera. But what I would say is I like not having to depend on traditional banks. I think traditional banking system's antiquated, unbelievably antiquated, and I think that it's a more efficient means of transferring money. I mean, that's number one. I think number two, I think the IRS, the industry itself, it's still a little, it's still a little old school. And I think it's high time for, people, the industry, et cetera, or humanity to decide upon using, I would say, blockchain before even crypto to really propel business forward. So that's no doubt you're in the right spot. That being said, so all right, so by the way, my answer would be, well, you got to be very careful where you're putting your money. I wouldn't say, you got each person's different, by the way, and unique. Let's also remember that. Um, a portion of a portfolio, if one has the means, should be put into crypto as an overall asset allocation. It makes sense to put in X, whatever percent X is. But at a minimum, if you have money to burn, that money to burn might end up outperforming every asset, just like crypto, in my opinion, has, generally speaking, if you look at the numbers. That also, I'm also going to dovetail that with saying, why not diversify away from an asset that is tied to, let's say, real estate, or that's also tied to the stock market, because it's discorrelative to those markets, generally speaking.
Yeah, what I love to look back on people who made the decision a couple of years ago to say, you know what, I'll dip my toe in with 1%, a 1% allocation. I'm off zero, but it's not any amount that I'm going to be distraught if I lose it. And in many cases, that 1% very quickly swelled to 5%, 10%, in some cases, 20%, depending on how you allocated. And that's what the magic of having this in your portfolio is that a very small allocation in something early stage that's very successful has an outsized impact and lowers the volatility of your whole portfolio without a huge risk if you lose it all.
But here's the flip side of that. I was on a focus group. It was kind of a focus group, and I'm old, so I was the oldest, and all these other guys were young, and this was pre-pandemic, by the way, and they were saying, basically put all your money in crypto, use it as cash. And I was on the other side of the spectrum. You got to be a little bit more cautious than that,
Mhm.
because if you're putting, 75% of your assets in crypto or any security or any investment, you got to be very, very careful. I wasn't of that opinion. They were all laughing at me, and this is before AI, et cetera. They were laughing at me because they were, I was shying away from that because I don't think it made sense. Because, man, if you're, let's say, older, a little bit more conservative, and all of a sudden all your money, 75% is in crypto, and it goes down, and you have a long way to go. But at the same time, a percentage of the portfolio, in my opinion, really should be in crypto if it's right for the asset allocation of that individual. Because just like you're saying, it probably will outperform the other assets, and then you'll be happy in the end. But you got to be cautious.
Yeah, I mean, risk management is this really underserved and overlooked part of this entire space. And even if you pick the right asset, you pick the right thing to get into, if you are over allocated to the point where you're going to get nervous, you're going to get shaken out of your position at the wrong time, or you don't understand it, then it's so dangerous for you, even if you have the right vehicle. So I think that apart from just getting on the right train, getting educated about it and position sizing appropriately so you don't have to sell when is the perfect opportunity to buy. That's the thing that, you hire experts and make sure that you've got people alongside you who are coaching you to not get into something that's going to uh, blow you up, for lack of a better word.
And by the way, it is scary because it's a new industry. I mean, cash economy has been around for years. Gold standard has been around for years. Really 2008, 2010 is when this really started. When I say this, meaning cryptocurrency. So it's all new. And I think when people are going to something new, they have to be very, very diligent. But at the same time, the person in the car with you helping to learn or to instruct you about and educate you about crypto is brand new also.
Mhm.
So at the same time, I think that might be good because you're kind of learning about a new asset along with someone who has time to spend, let's say, 8 hours a day on crypto. So I almost think that's a good thing. As a matter of fact, that it's new. You're learning about where your money should be invested, et cetera. When, if you go to a traditional financial advisor, not to rip on traditional financial advisors, they might have the upper hand because they know, they have more time, et cetera, and a background in whatever, stocks, bonds, mutual funds.
What I love about mining in particular is people think about mining as this sort of like advanced move in the crypto space. Like, oh, I can't get into that. That's too technical. But to me, it's the best vehicle for education because you are getting in
Yeah.
at the protocol layer, at the foundational layer. You're literally participating in how these networks work. So you're naturally going to get a deeper education than if you're just buying it and holding it on Coinbase. And because it's a cash flowing asset, you remove some of the emotional volatility of, say, buying a coin at 100K and watching it go down to 50. If you're mining and you're mining with margin, then you didn't actually lose money. You just have slightly lower cash flow margins. And that's a way better place to be psychologically than if you were buying an asset, buying a huge position, and then watching something happen that you weren't expecting. So ironically, I thought that our customers, when we first started this business, would be a lot of very tech forward, younger audience. And what I found was we actually needed to build an education company because a lot of people were setting up their first wallets with us. You know, definitely over 50 is a majority of our clients. And
Really?
we had to build the rails that teach people the 101 level of what is this? What am I buying? And provide that sort of container where it isn't this scary thing that you get burned once and then never touch it again and miss out on a generational opportunity. But you've got a well-charted path through it.
That blows me away that you have that many, let's call them mature people. Wow, that blows me away. That's pretty cool. Somehow, and you're young. I don't know how you've gotten on hanging out with all the old people. Just kidding. If you're older out there, by the way. All right. So let's take a step back. Most of the people who are watching and listening to this are probably real estate investors. Some are, brand new into the crypto world, Bitcoin world, blockchain world, and some are way advanced. So why don't we start at the beginning? Let's define what we're talking about when we're talking about mining, Bitcoin mining, as you explain it.
So, Bitcoin mining, in the simplest way of explaining it, is just turning energy through a process of computing into a digital asset, which is Bitcoin. And the way that that process works, again, we can go very technical into this, but the simplest way of explaining it is that mining is like a lottery system. You are participating in a lottery that goes off every 10 minutes. And when that lottery goes off, there's a reward paid to the person who wins it. And the person who wins it is also performing a certain kind of work for the network to keep it secure and process transactions. The best analogy that I've come up with to date is that the miners are something like a mix between the military and Visa. They're getting paid transaction fees for all of the money that moves across the network, as well as putting up a wall of encrypted energy that secures it from attack. And that's the best way that I could summarize it without getting into protocol level description.
And I say it in a very simple way. I'm sure I'm wrong the way I say it. I basically say you're making money and you get paid to make money and you get paid very little. But if you do a lot of making money, you end up getting a lot of money. I don't know. That's the way I look at it. And I know it sounds weird, but you basically, if you're doing the work, you have to get paid a little bit because it's a lot of work. It takes a lot of energy, a lot of cost. And therefore, since it's a distributed, if you will, marketplace or manufacturer, you deserve to get some of the money. And it sounds like you've put together a pretty cool way of making money for your clients or showing people how to make money. And therefore, they make money based on the initial investment of X, whatever that is. And they're getting paid hopefully a lot down the road because they're doing more and more manufacturing of the money.
Exactly. Manufacturing is probably the most apt metaphor for this, which is you're taking a raw input, which is energy, you're doing something to it, you're transforming it, and it's becoming this digital product on the back end. And the margin between your input cost and whatever that product on the end goes for on the market is what you make in cash flow. And the reason people choose to work with us exactly for that reason is that we are going out, we're very efficient in building infrastructure. We're getting large energy contracts. We're assembling these essentially economies of scale where hundreds of people are getting together. They all own their own equipment, but they're banding together to use this abundant energy resource and paying someone like us to manage it for them and keep it hands off and abstract away the technical barrier that keeps most people out.
Yeah. So as an example, let's say I'm lazy, which I am, and I decide, I want to be a Bitcoin miner. I would have to go out and buy one of those cool computers, really cool computers, and I'm going to mess it up. I'm going to mess it up. I'm going to do it real inefficiently. I'm going to be working, so it's always going to break down, and I'm only going to make a little bit because I don't know what's going on, or I'm going to hire someone like you or your company, and you have hit scale, plus you've got all this experience, et cetera, And if I invest X, let's say it's $10,000, I'm going to get rate of return because you guys know how to turn the screws, work the computer, lower energy costs, because that's a big consideration,
Mhm.
by the way. So it ends up making me more money than if I'm going to, again, go out and buy my own little computer.
Exactly. So you're participating in the economy of scale where a bunch of people have banded together to all co-locate in this facility that we've built at Abundant Minds. And we've now got 5 of them across Oregon. And the cool part of this that we don't talk about as often, but is still, highly impactful, is that when you can get these big projects together, you actually have a chance to impact the lives of your local community. So in our first site, it was more of a direct energy impact where we're just helping them procure energy better and lower the cost for that community. At our second large scale site, we're actually repurposing our heat so that in the Northwest, when you've got no growing season, you can actually hook the heat up to a greenhouse and grow fresh food for the food bank throughout the winter, donate it locally, and essentially bring fresh produce to a food desert. So there's all these cool engineering hacks that when you assemble enough resources in one place, and design a plan, you can have pretty holistic impacts that are outside of just making money in the Bitcoin space.
Yeah, and that's a lot of it. People don't, right now, it's still energy inefficient, although I'm sure it's going to become more efficient over time, although I've been saying that for a long time. But people don't realize that there's a real energy cost. It's a lot of work to get all those computers working. And if you could bring that energy cost down, you as an example, you can share the energy savings, i.e., increase the profits with the client, and it ends up being better for everyone.
And most people don't realize this. I didn't until I was in the industry and had to study energy systems, that about a third of all of the energy that's produced in the world goes to waste. It just gets
Yeah.
generated and has no end use. So when we can go into these situations, whether it's curtailed hydropower or wind or solar that otherwise doesn't get used, we're effectively monetizing a waste product and bringing efficiency to the energy economy, which, if you haven't studied energy, is the underpinning layer of how all of civilization functions. So if you can have an impact there on the downstream, you've got an impact on everybody's life in the world.
And my thought is, this is down the road, but when fission becomes more of a thing for, and this is down the road, energy efficiency, it's going to really help blockchain, et cetera, because there's going to be no or almost no cost, and it's going to be a big deal. It's going to be a really big deal to crypto. But I digress. Okay, so all right, so I know this is a weird question. Of my, let's say I put in $100. What's my fee? How much of that do you guys take out? Again, because I'm thinking, okay, wait a minute, maybe I could go do it myself.
So your example of 10,000 is a great entry point because you can't get a $100 machine that's worth anything. You could mine with something on your desk that's effectively like a little lottery ticket. But let's say, for argument's sake, you've got a $10,000 machine, you've got it hooked up in our facility. A flat monthly fee every month goes toward electricity, hosting, labor, technicians, essentially everything to keep your machine online, and that's $225 a month. And that $10,000 machine, again, point in time, Bitcoin price moves very, very quickly and in many directions. Assuming that we're around $100,000 Bitcoin, then you're looking at about $500 top line revenue. So 225 a month expenses, you've got just around 50% margins on that coin that you're producing. If you were to try to do this at home, depending on where you live in the US or the world, most residential rates are going to be 50%, 2x, sometimes in places like California or Florida, up to 5x what industrial electricity rates would be at our sites in Oregon. So even if you wanted to manage your own machines, the heat, the noise, the repairs, it usually doesn't make any economic sense to do it at your own home. And that's why people choose to go with us. It's easier, it's cheaper, it operates better, and you can scale way past what you could fit on a home electrical circuit. You're usually capped out at 2 or 3 machines, depending on how your house is wired, whereas we've got space in our facilities for thousands.
Yeah. So what you're saying is, I give you a check for whatever, as you mentioned, $10,000. I have a cost of $250. I know we're generalizing, by the way, $250, and then thereafter I get a check on a monthly basis for X. Sounds like $500.
Yeah, and the mechanics of that, so you're right, you're paying that 225 a month in those operating costs, and then your revenue is paid out in Bitcoin. So we never actually custody your funds, we don't sell your Bitcoin for you. You get to choose what you do with your money. And that brings up an important point, which is, are you taking out some of my Bitcoin to pay for my operating costs? And we don't, because we prefer you hold on to the Bitcoin. A great story that I tell, or maybe not so great, is that one of the members of our team has been mining since 2012. He's sold over 100 Bitcoin to pay for electricity bills in his mining journey, which, if you were looking at today's prices, is somewhere north of a $10 million opportunity cost. So every miner typically has two regrets. One, I didn't start mining earlier. Two, I sold my coins to pay for electricity. So we encourage everybody, pay for your electricity bill, your hosting bill in dollars, and keep the Bitcoin for as long as possible. And that makes the investment make way more sense.
Yeah, I get it. And then of my, let's say $10,000, how often do I need? Let's say January 1st, I buy a computer from you, and I'm way oversimplifying it. I know it's wrong. Whatever. I'm in the mood.
You have to.
$10,000. How long until that computer is antiquated and I need to buy another one?
So historically, between 4 and 6 years is a reasonable economic life for these things. And I have we don't have to go all the way down this rabbit hole, but if you look at the return curve, or not the return curve, but the efficiency gain curve of machines over the last few years, it's slowed down. So the first version of a mining computer up to the second version got 10, 100 times faster. From the last version, say 2020 would be the most recent reference point up to now, only a 2 to 3x. So we're decreasing in terms of the iterative efficiency gains of these machines. And that to me signals that the ones that you buy today probably will have a longer economic lifespan than the ones that you bought 5 years ago.
I didn't know that. Okay. And then what's the downside for me as a business owner? By the way, I should reset. This is Ken French with Bass Voice, telling business secrets to entrepreneurs, hanging out with Beau Turner, and we are hanging out talking about Bitcoin and crypto mining. Specifically his outfits in Oregon. We got to give a shout out to his company. You got to go into a little bit more detail on your company here in a little bit. I'm having fun. All right. So what's the downside? Let's say I decide again, January 1st to buy a computer. What's the downside? One, could it get stolen? I'm just whatever. Probably not. Two, could I be liable in some way? Let's say, I know this isn't possible. Let's just say someone, I don't know, something happens. Can I get sued? I don't know. I can't think of any negative way that someone could get sued in Bitcoin mining. It's pretty much impossible. But I'm just trying to outline the downsides for some of the viewers and listeners out there.
Yeah, so we cover all our facilities for liability. So if for some reason your computer starts a fire, which is highly unlikely and we're designed against it, but let's say it happens, you're covered against that issue. I would say the biggest risk to getting in this, one, if you don't have a positive view on Bitcoin in general, then you probably shouldn't be in the space at all. Mining is highly correlated to how successful Bitcoin is in general. It will still make returns and make cash flow, even if price is flat and does nothing. It's one of the benefits. But if you're negative or bearish on Bitcoin price in general, then you probably don't want to be in the space. And the value of that computing equipment is correlated to the price of Bitcoin. The other thing that we haven't talked about, but part of my early story getting into mining was choosing the wrong partner. So my wife and I spent about $500,000 on machines that were hosted in Georgia. That provider was an absolute nightmare to work with. That was essentially a total loss event for us. The worst year in business that I've ever had. And the origin story for the company, the reason that we offer the service that we do, was building what we wish had existed when we were trying to start this hands-off income stream of just owning servers and collecting Bitcoin. So when people are evaluating what are the risks of this, well, Bitcoin is a counterparty-free asset. It exists on a global digital network. If you custody your own funds, there's essentially no way for that to be taken from you unless you're negligent. And that's a beautiful thing. There's essentially nothing in the world that exists with those characteristics that make Bitcoin so special. When you enter into the mining world, you're doing so either because you want cash flow, or you want to outperform Bitcoin, or you want the tax advantages of depreciating your equipment. But you're also entering into the physical world, and you're entering into counterparty risk. If you're trusting someone like me to not just be truthful and operate with integrity, but also to operate efficiently and run a good business and get great energy contracts and keep everything running well. So you're taking on a risk with the expectation of an increased return, but you're also taking on additional risk when you choose to get into the physical world and have a human being who is in charge of making sure that everything works right. So that would be how I'd compare the risks to just owning Bitcoin itself.
Two little funny stories, and this is the downside of crypto, and these aren't representative of most crypto situations. But my buddy had a computer, had two computers that were moving. He was moving, and he told his buddy, "Hey, go throw that computer in the dump. Put that one in the car." He was very specific. So he says, "Well, you know what happened? He threw the wrong one in the dump, and the wrong one in the house or in the truck or whatever. Lost all his money." This is early on. Like, and of course, he says now he would have been worth 40 million. Nothing he could have done. Right. Number one. Then number two, my buddy or one of my employees, brilliant kid, way smarter than me, was roommates with the dude or a group who invested early and started basically Coinbase. And they were giving this kid, my employee, a bunch of, I don't know if it was stocks. Let's call them synthetic shares. Right. He lost them all. He didn't think they were going to be worth anything. Anyway, so those are two stories. Got to make sure that you're thinking when you're working with crypto, right? The physical element, right? By the way, that was kind of tongue in cheek, but you got to make sure that you're you're taking care of your investments. By the way, overall, but all right. So then, what about this? What about this? So let's just say all my crypto is being kept with you, and all of a sudden, all of it's gone, fire, etc. What then?
So one point to clarify, we don't hold any of your coins. So any of the digital asset that you're mining, the Bitcoin, you are in custody of. That's part of our.
Yeah, I got you.
Yeah.
Yeah.
So we do have your machines, but I just want to make
That
sure
was
that
my bad. You're right.
you're all good. So something goes wrong with your machines. We do have insurance policies. So most people elect not to get these because they're still super expensive for what they are. You can imagine that if you're working with a $10,000 piece of equipment, that's a piece of computing equipment, insurance policy on that might be a little bit more than makes sense if you're only cash flowing a couple $100 a month. So most people, let's call it 99% of cases, choose not to get insurance on their rigs. Working on products to make sure that is more efficient and more cost effective. But as of now, most people choose not to do it. For the coins that you own, so just to separate that, for what you're actually custodying yourself, those coins, um, those loss events that you talked about are super common. They've happened all throughout the history of the industry. It's one of the things that I think is most important to guard against is not just how do I make money, but how do I keep it and keep it safe. And so that's part of every onboarding call is helping you set up with a custody solution that makes sense for you. And it's not one size fits all. Not everybody wants to hold their keys on an exchange. Not everybody wants to have a hardware wallet. Not everybody wants to go bury a metal plate in their backyard with their seed phrase on it. Everybody's got a different risk profile, is custodying a different amount of assets. And so we have to be very individual about the way that we set that up. And not everybody wants to deal with the headache of inheritance of trying to figure out, okay, I've got one key over here and there's another key in another state, and my mom is managing it. I mean, I've done this because my mother is uh, you know not the most technical person, and I've helped her set up custody, and so I'm very familiar with the realities of, even though there is an optimal solution for custody, it may not be optimal based on someone's expertise. So that's a part of every setup call, is making sure you are protected against that loss in a way that makes sense for you.
Yeah, I bet you. Yeah, that's important. I mean, a lot of what you're doing is education, from the sounds of it. That's a very big barrier to success if you're not, well educated as to what's going on.
We make
Um,
we make no money on education. We don't sell coaching or courses or anything like that, but it's really had to become a part of our core competency, is making sure that people know what they're getting into. And honestly, more informed customers and more informed investors are easier to work with. They get less frightened when things move around and when things change. And we've found that our retention rates are way better than our competitors in the industry because we spend the time and care up front to make sure that people know what they're getting into, know how the market works, and don't have to have an emotional reaction when something moves in a way they weren't expecting.
yeah, I get it. How has, obviously, based on our conversations, we're big proponents of artificial intelligence. We've been doing it since we started researching it in 2014 is when we started implementing it. In 2018 is when we had our own model for taxes, right? So I'm very surprised that AI has not impacted more actively Bitcoin, blockchain, et cetera. What are your thoughts on that? I really don't understand that. It blows my mind that it hasn't impacted it like thought it would have.
This is such a deep rabbit hole. We could hit on so many different parts of this. I will say it has had an impact in the sense that Bitcoin mining was the most hungry consumer of all the available energy at the most economic rate up until AI really started to take the scene. And now you're seeing that they are much more price insensitive. They're looking for huge blocks of capacity. And so people that previously were looking at developing mining projects now instead are repurposing the same power and land for AI facilities.
That's totally true. Yeah.
In terms of AI impacting the mining space in general, people may not understand this, but the mining algorithm, I mentioned that it's kind of like a lottery system. And in that sense, you're basically just guessing random numbers very quickly. So there's no amount of intelligence or general purpose compute that's going to impact how mining works. Like you're not going to have an AI model that suddenly makes Bitcoin mining more efficient because it's essentially just building purpose-built hardware to do one thing and one thing only,
Mm-hmm.
and there's no way of gaming that efficiency. There's no
Yeah. Sure.
algorithm update or intelligence that changes how quickly you can guess a random number. So in that sense, there's no real threat to the economics of Bitcoin mining through AI. But what I'm really interested in, what we're seeing, is that these are both computing resources. They both require energy. They both require networking and bandwidth, but that's kind of where the similarities end. And you couldn't say, I'm going to go develop a project and it be either Bitcoin mining or AI on any given day. They're totally different developments. But what I'm seeing a lot more is the idea of combining the two because they have very different load profiles. And so you
Mm-hmm.
can build a facility that's, say, mostly for the purpose of AI that uses Bitcoin mining as an energy off taker and energy balancer. Because in many cases, especially people that are, let's say, running model like a financial model, they'll run that for the hour before the market opens. And that's it. The other 23 hours of the day, there's nothing happening, but they're paying for all that energy and all that computing capacity. So if
Mm-hmm.
you've got miners there, you can actually utilize that resource, make something of it, and actually provide a more stable load profile to the grid, which makes all of our energy systems happy.
And it's just better for the overall environment. I think what I was thinking that AI was going to do is it was going to have more offshoot industries or make mini cottage industries that are going to be beneficial to not miners, but to crypto investors, blockchain, et cetera. So I guess I was coming from the standpoint that it's going to be impacting kind of the peripheral elements of crypto. And it hasn't. I mean, I think it's impacted so many other elements of uh, world commerce, but just it seems like it's been slow to impact, crypto just in general.
I think, you might resonate with this. I've seen this happen a couple times in my life where I see what kind of impact a new technology should have.
Mm.
And you might be right, and you're just early. So we saw this in the early days of the internet when it first was popularized. Uh, you know, Looked like something that was going to change the world. The late '90s, early aughts bubble popped, and people thought, okay, this was just a passing fad. Well, all of the things that people were talking about at that point were true, and it's also true that it was overhyped and it was early. So, it might have taken 10, 15, 20 years for the world that the early adopters imagined and saw coming to actually come to fruition. And
Well,
it might be the same thing here, where you're right, it's just still only a couple years old, and it might be 5, 10, 20 years before you can fully flesh out the impacts of those two things interacting.
yeah, that's a good point. That's well stated. So, all right. So, before I forget, how does someone get a hold of you, and how does someone engage you or engage your company, et cetera?
Yeah, of course. Easiest way to find us would be the website. That's abundantminds.com. And we also do a ton of free educational content on all the social platforms, YouTube being the one that's got most of it. Got the podcast, the long form educational videos, short videos. You can find us at Abundant Minds on pretty much every social platform, including YouTube. So very easy to find. If someone wants to work with us, get some units running, get some passive Bitcoin income, then you can book a call through the website. And would love to help anybody navigate the space. I think we've made it clear at this point that just because someone is coming in totally fresh and doesn't necessarily have a lot of experience does not mean that we can't help you. And in fact, it's one of the great joys of our team is getting people who otherwise had no exposure to the space to get it and feel comfortable with it.
Yeah, yeah. Getting ready to land this plane. So, real quickly, by the way, how many nodes do you have?
How many like miners operating?
Nodes, yeah, yeah.
Yeah, so we've got 5 facilities and just under 2,000 actual computers.
Got it, got it, got it. So let's say I wanted to come in tomorrow, and I call you. How long until I'm up and running?
If you're getting, say, 10 units or less, so 100K spend or less, I think we just got a shipment in, so you could be on that same day.
Oh,
If
wow.
yeah, the people that are getting, 100 plus units, they're spending 7 figures or more. There's about a 3-week lead time to get those units in and racked.
I got it. I got it.
And I forgot to offer this as well. For anybody listening to this, we do a free month of hosting as well. If you just mentioned that you heard about us from Kenner's show, then happy to get people on and get that first month of Bitcoin with no cost.
That's awesome. Do they call in, email? What do they do for that?
If you book a call with our team, just mention that you heard about us on Kenner's podcast, and they'll know what to do.
And then again, they go to the website for that. Once again, abundantminds.com.
Yes, sir.
All right, cool. How about this? Before we close the door, what's one thing we haven't talked about that can add value to an investor with respect to whatever mining or whatever the case is?
I touched on it for 1 second, but it's worth repeating. And that is that with the One Big Beautiful Bill passage, we've got 100% bonus depreciation back on the table. So mining equipment is a qualifying business asset. So if you're looking to get a tax offset and try to get an allocation in the Bitcoin space, getting a miner might save you some money on taxes and get you an income stream denominated in the best money in the world.
I'm glad you mentioned that, ladies and gentlemen. Yeah, and we got to remember that crypto, it's not what you make, it's what you take home. And by you investing in, let's say, crypto mining, et cetera, you can save money in taxes. That you should like. So but with that, Beau, I really appreciate you taking the time. This has been good for viewers, listeners out there. Once again, this is Kenner French, Vast Voice, telling business secrets to entrepreneurs. Thanks, everybody.